Okay, so the profit on the account this week was exactly... Hello everybody, welcome back to the FOREX channel. Today we're back with another episode of the 10 to £1,000 challenge. But as you've probably seen in the past episodes, we've been gaining like £10-20 per episode. But this one is very, very different. We had a big gain on a gold trade, which I'm going to go through in a minute. But I just want to say thanks for all the support. Been getting so many views, subscribers, and a lot of you have been following my Instagram. So yeah, message me on there. I reply to every single DM. If you've got any questions, anything like that, go message me on there. Also, I have a VIP Telegram group and a free group. Link in the description. Check them out. Yeah, I send out some free trades, and also have a paid group for more in-depth analysis, trades, and stuff like that. But yeah, what I'm going to do is just go through my chart now on this gold trade, which was sent out to my VIP. We did actually close the trade around 160 pips. So yeah, it's been a very good week. We had a GBP AUD short position, which I've done a video on the YouTube channel on. I did a full breakdown. That was plus 90 pips. We had a AUD USD short position, which hit the stop loss for around 24 pips or so. And then this trade we're up 160 pips. So around 230 pips for the week so far in my VIP channel. Let's just go onto the charts now and let's have a look at this. So what I'm going to do is get rid of everything on the charts. So we've got a clean chart. I've actually been testing out different colours on the charts. And yeah, this is one that I found the best. Because what I found is when you have colours on the graph, it can like distract you. So if you see a huge bullish, if you have bullish in green or whatever colour, blue, it can like distract you. But if they're all the same colour, your mind is like clear, and yeah, you've just got a better understanding of what's actually happening. You don't get distracted by the colours or anything like that in the charts. And I love to have nice clean charts, as you probably know. Look, we've got no grids, no indicators or anything. I just like it nice and clean. So what I normally do is I go on the daily and the 4 hour, and as you see here on the daily on gold, since this high up here we have been in a downtrend. And if you trade, you probably know what happened to gold this week on Monday after the vaccine news came out. Obviously people were getting rid of their gold, selling it off because it is the safe haven. So what we found here on the 4 hour was actually after this drop here, we came down to this level around here. Had this level previously which we didn't actually manage to break below. So if we put a line, horizontal ray, which is the one here with the line to the right of it, we put that on there. And we also see the price pull back, consolidated, push back down to this area. So once again, you can put a line around this area here where price couldn't break above. So this is the zone we're targeting, and it's not a very small zone. It's actually 210 pips or so, this zone. So what we do now is we drop down to the 1 hour. Obviously we've put zones on the 4 hour, just the general zones, and now what I usually do is adjust them to the 1 hour, because obviously it's very, very different. So what I'm going to do is put a horizontal ray up here for the target, which is around 1889, 1890 area. Obviously we're targeting the highs when we're in a long position. And then also, as you see down this area, we did create a double bottom, a perfect price lined up to the exact pip to create a double bottom, as you see. When price actually created this double bottom, this is where I was actually looking for a trade. So what we had, we drew a Fibonacci on up to here, and as you see, price came down, rejected the 61.8% Fibonacci, and then pushed back up bullish. And when price came down here and created this indecisive candle here, this is when we actually entered the trade and sent it out to our VIP members. If we draw a long position on here now, we had stops, not that big. We had stops at the low down here. So we knew that if price came down to here and broke it, then we were going to be out of the trade because price was going to carry on going down. And our target is up here at the top. As you see, a 1 to 5 risk to reward ratio. And what actually happened on this trade was price pushed up straight into profit, came down to retest this area, pushed up, came down to retest. And if we actually use a Fibonacci further on in the trade, as you see from this level up here, this area here, price came down, rejected 38.2% Fibonacci level. And since then we have actually been bullish. we've been pushing up. I did actually have another area drawn on around here, because as you see, we've had rejections here in the past, and a rejection here, and as you see, we broke and kind of retested it here, and pushed up, retested it again before pushing up bullish around 200 pips to this area. And as you probably can see, this area up here is actually an area of resistance. We've had wicks, if we extend this, wicks into this area previously, and we haven't actually been able to break above it and stay above it. As you see here, we broke above, but we couldn't actually stay above this level. So on this trade, we entered around here, and what actually happened with my positions on this trade was I entered here around 1864. Price pushed up, I was around £120 in profit. I'll pop up a screenshot up here, and I think I was around 50 pips or so in profit. So what I then did was move my stop loss to break even, and you know, when price came back down here, took me out a break even. Well, with swaps, I think it's like -£3 or something like that. But yeah, it's a shame. But then this morning, we saw that price started to reject this area again of where we entered exactly before, and we entered another position. But this time, instead of a 0.2, we entered a 0.3 on 3 different positions with 0.1, 0.1, 0.1. I like to split up my orders because then I can just cut them whenever I want. So if I reach like take profit 1, I'll cut 1 off, so that sort of thing. So you're always securing profits in the markets. And then what we had was we entered down here, pushed up, price actually started consolidating around this area here. So as you see, the low of this candle, where it couldn't push below before, actually acted as a resistance here again. And yeah, I just closed out my trade here. Annoyingly, I closed it out a lot earlier than I should have. So yeah, my trade was around here. I entered. So we closed out around 60-70 pips when we could have held it to around 180 pips. But yeah, that was quite annoying that I exited a bit early. But you know, you can't help it. And in my mind, I saw here that we did actually start rejecting this resistance and this bearish hammer candle here, as you can see. So it wasn't really looking very likely to push above. But you know what gold's like. We came back down, retested this support, and rallied up around 100 more pips or so. I actually told my VIP to close around 160 pips around here. And as you see, we timed it perfectly just before it started dropping down another 40-50 pips or so. So we caught that nice 160 pip trade in the channel. So yeah, it's been a very good week in the channel. We've been catching a lot of pips. You know, I don't like to enter loads and loads of trades. Some traders, they enter like 10 trades a day, but each trade's like 10 pips, 15 pips, and with like a 50% win rate. Like, I just don't see the point in doing that. I like holding positions either for a day or 2 days or so and catching that big move. As you see on gold here, we had a nice 180 pip move we caught with very little drawdown, literally no drawdown as we entered straight into profit. We did have a little like 2-3 pip drawdown here, but after that, when it pushed up, our stops were covered very, very quickly. And when you're trading something like gold that could move 30 pips, 40, 50 pips per candle, as you see here, this candle here on the 1 hour, with trading gold and currencies like GBP, JPY, any pound pairs really that have that high volatility, you really had to be careful. You had to be using stop losses, correct risk management, because any bit of news comes out and they're just going to wipe you out. Like, your account is just going to get destroyed. So what I found was tight stops on gold works. This was a 50 pip stop, and obviously we were aiming for that 260 pip ish take profit. But obviously on the account, this wasn't actually the only trade we took this week. We had those Aussie dollar, US dollar short positions, which actually ended up hitting a stop loss. And I think that was around -£35. So at the start of yesterday morning, the account was actually on around £112 or so. 112 to 115 pounds, I can't remember exactly. But yeah, the trades today, this is what you're interested in. We profited £100 and 39 pence. I was just thinking, if I close those first trades in 110 and I closed these ones in 100 as well, we would have been on £300 in the account. But you know, didn't happen, so we're not going to talk about that. we're going to talk about what actually happened. And the account balance now, from we started with £10, it's only been about 8 weeks. So that's a very, very big gain on a small account. It is on £216.02. You know, it is a very, very big gain. So I'll quickly show you that it's a real account. I'll cover the name. As you see, yellow, real account. No fakes around here, guys. So yeah, very, very good week on the trading. I'm going to try and do this episode every week, a 10 to 1,000 until we get to that £1,000 mark. And then I'll decide what I'm going to do with that £1,000. Maybe give it away to a subscriber. Let me know in the comments what I should do. But yeah, that's all I'm going to show you in this video. Just a little recap of my week in the trading. Yeah, it's been a very good week in the markets. So if you did enjoy the video, like and subscribe, and I'll see you in the next one.